One conversation, three perspectives, honest debate on the stories shaping the travel industry.
Each episode tackles a live issue, big trend, or hot debate from across the travel industry.
Every week, we'll be joined by guests for honest conversations, strong opinions, and lively debate.
I'm Will.
I'm James.
I'm Andy. Welcome to Let's Talk Travel.
Founded in 1995 by Sir Stelios Hadjiionas and based upon the low-cost model of America's Southwest Airlines, it was created to take on the airline titans of the 90s. Its model was simple. We are low-cost, low-frills airline, and we fly from A to B, just like the competition. It was the start of something wonderful, a new age, and of course, that orange becomes synonymous with the brand, Easyjet. Today, though, Easyjet are not being talked about because of a new route or a new lower fare, but potentially a new owner. A little under $5 billion is on the table from Castlelake, an offer that is deemed too cheap to get the deal done. However, enough to allow the books to be opened and a deadline to be set for a revised offer. Today, we want to ask the question, would the acquisition of Easyjet be good, bad, or plain ugly for the travel industry? Well, hi guys. I think this story has become a lot more interesting over the last week. But as a reminder, let me remind us all of the timelines. So mid-June, rumors are circling that Castlelake, who are a global investment firm of around 38 billion of assets, so a bit more than us guys, want to not just increase their 2% ownership in Easyjet, but we're looking to acquire them. So 20th of June, it's now transpired that Easyjet's board have rejected a third bid. And I should add, this one was still massively undervaluing Easyjet at a time of a lot of geopolitical instability. Then on the 26th of June, a fourth offer is made of 4.9 billion and Easyjet's shares surge by 13%. But the offer is pushed back. But now this is the important part of the rejection. It's the fact that Easyjet then agreed to provide access to a limited commercial information and have extended a deadline to Castlelake, which we believe to be around the 5th of July, for them to come back with a revised offer. That's not the behavior, to me, of a company that's dismissing a bid, but maybe potentially of a company saying, I think you're undervaluing us. Why don't you come back with something better, something juicier to get us talking? So we're going to jump straight into this, and I'm going to come straight to you, Will, and say, what's your take on all this first off, and then what do you think about this bid? Do you think this is real?
I think it's really interesting, and the reality is right now it's moving so fast, but by the time we get to the end of this podcast, we'll probably be in a completely different position from the one we started at, let alone when we actually publish it. Is it a serious bid? Absolutely. Are Easyjet taking it seriously? I think they probably are. And I think they would be foolish not to at least explore the options. The aviation sector is going through a pretty tough time at the moment. So why wouldn't you look? But the numbers got to be right. And I don't think they're there yet. And if I was them, I'd have to be convinced that the model looks right in terms of the progression of the airline, and that's what really worries me. And I don't see this as being good for the industry, depending on who takes it on and how they take it. But right now, the offer that I'm seeing, which is limited, is not good.
No, and 570-ish is where the share price is today. How high is this bid going to have to go, do you think, to really whet their appetite and get them at the table and having a serious discussion?
Well, I saw the Barclays estimate was the assets are worth £11 a share. So, you've got to go, well, where's the difference? Castlelake come from an aviation leasing background, so they know all about this. I believe they even lease some aeroplanes to Easyjet, but now they want to get involved in operating the airline, or do they?
Yeah.
And that's the question. And that, for me, is really where the differentiator is, because I think the holiday sector is really interesting, but where else are they ultimately seeing the value? And that's what scares me about them taking this on.
Yeah. And there's a lot of logistics around, obviously, owning a a European airline, mainly that you have to have an operation based in the EU.
You have to be European, yeah.
So what questions does that raise as well, and how are they going to get around that?
Yeah, I mean, I think that does raise a really good question. And it's obviously come up because they've also got these co-investors they've brought in, the two Irish guys, is it Peter Bello and Mark Breen, both with aviation backgrounds. In fact, Peter Bello was involved in Easyjet previously and was involved in Ryanair previously. So they're making sure that they at least align it properly to get it through from a regulatory perspective. And that's why I think Easyjet are opening their books. And as I say, I would question all humans and all businesses. If the price is right, you're probably going to have a little nibble, aren't you?
Yeah, yeah. Okay, so now we're going to ask, why does everyone want Easyjet, or why do Castlelake in particular want Easyjet right now? Why do you feel it's so attractive, Andy?
I mean, we've talked about the share price, and the share price has dropped a bit. So I think there's maybe a bit of opportunism as in to say now is the time. But there's also been lots of rumors over the last few years of Easyjet being one of the most, I guess, sought after brands in the market in the aviation sector. And now holidays probably available. So I think there is a number of things which are attractive. Number one is just the Easyjet brand. You mentioned 1995. That's 30 plus years of a successful brand operating, growing, and being one of the most recognized. And I guess, we had TV shows back in the 90s, most of them the most loved brands at one point, maybe not so much now. I don't know where they sit, but there's definitely some credibility and value there. Secondly, they do have a huge asset of flights and routes and planes, which again is attractive to the buyer. But I guess more importantly is the growth of the company, which largely, or has been a significant chunk, has been the holidays market, which has been a hugely successful operation, hugely positive for the brand, and also profitability over the last few years. And I think if you think about where does EasyJet grow or go if this was to happen, and I think the ability to sell low cost, to sell to perhaps the European market across smaller routes, or certainly not long haul, where perhaps we're seeing a shrinking of the world, perhaps with Europe focusing more on itself in the next few years, I think is a great opportunity for the brand. And again, if they can take some of the costs out, make those flights more appealing, grow the routes, grow the holiday offer, I think that for the consumer at the end of the day, which is what I'm sort of thinking most proactively about, I think there could be a great opportunity for EasyJet to offer some great deals to some great locations, and really be a stable but growing brand for everyone. And I think those relationships they have on the B2B side are also very, very important. And I would like to think positively that those are going to be ones that they try and leverage rather than shrink.
Well, okay, so that's where I'm going to throw some controversy into this conversation.
Okay.
Because this is part of their success, is they're very different to the typical other low-cost airline that's out in the market. So Ryanair do not want to have a relationship with the trade. They've always said that. In fact, they've taken numerous court cases against both low-cost operators and OTAs to say, stay away, don't screen scrape, etc. EasyJet, their tactic was very different from the start. They said, we're going to create an API, and we're going to let you have access to all of our flight data. In fact, we're also going to stick it in the GDSs, but you have to pay a small premium for that service. But that will allow you to have access and to package those holidays. So there's a lot of risk here. Will, what's your takes on this?
Well, I think you're speaking to my point. That's why I think it's the wrong purchaser for the benefit of the industry, because if I'm Castlelake, and don't forget what's happening here is we're taking a company that's on the open market into private equity. When we get private equity involved, they're going to want a return on their investment. They're going to want to see a pathway to really make some money in an industry that is struggling in certain parts. I agree with Andy's point. It's massively undervalued. I think we all agree on that. But I think if you're going to be cold about this, the way potentially to make money is you divvy up all of the different parts and you sell it off for parts. So you take the holiday sector, which has been very successful. I think it's been very successful on the back of the airline. I have to say that, on the back of the brand. But from a numbers perspective, it's been hugely successful. But then the other value is the slots that they have. And, you don't just go in and buy Gatwick and Amsterdam slots. You sort of earn those over time.
Yeah.
And then the actual planes themselves. And you wonder whether actually what they might look to do was exactly to your point mentioning Ryanair, is try and compete with that model, split off the holidays part and get right in the trenches against Ryanair. And I think that is dangerous for them in terms of how Ryanair are positioned, how Wizz are positioned. EasyJet have been that kind of, dare I say, higher end, low cost airline.
Yeah.
And I think, again, to your point, that's really played a part as they've got on well with the trade. It's backed into the whole holiday product. So as soon as you start splitting that up, you firstly increase your competition on all of those parts. And Ryanair have done it incredibly successfully with all of their ancillary revenue and how they've put themselves out there. But if you're now going to look to potentially flog off the holiday bit, which complements everything else you're doing, and flog off the slots, I think you'll find yourself in trouble. Andy's grinning. He doesn't agree.
Go on, Andy.
I think you're getting way ahead of yourself here. This is for the EasyJet group, which does include the holidays, does include the flights, does include the brand. All of that comes currently in the package, and you're already deciding that they're going to break this up into 5 different bits and sell it all off and maximize the revenue. They could do that. They absolutely could. But this is one of the biggest, as far as I'm aware, one of the biggest growing holiday companies in the UK. Why would they want to then start breaking that up? Because you said they're linked the flights and the holidays together. So separating that is going to create a lot of problems. To James's point, if they built a whole B2B operation which is differentiated in the market to their biggest competitor, I think they would be a bit crazy to start trying to squeeze that too much. Yes, there may be some price increase, but if this is the thing which is driving a lot of their revenue, a lot of their market, then that would also be a bit silly to do. And the company buying this have aviation experience. You just mentioned 2 guys there who are going to potentially be leading it as the European settlement. These guys are not going to be here to just like make a quick buck. They're going to try and grow it and maybe even sell it again in the future. So how are they going to do that? They're going to try and grow revenue, try and grow passenger numbers, and maybe do deals with other companies off the back of it. And I could only see more push, more energy, more hopefully enthusiasm to do all of those things. And as long as the consumer can tolerate some increases across the line or the business, I think this is just going to, hopefully be a good thing.
Sorry, James, I want to just pick up on Andy, because if it is such a good proposition, why is the offer so low? And then why are the board now potentially entertaining it? Aviation is struggling, and at that higher low cost sort of sector, that is a tough kind of sell. We were talking before about how BA used to run their their short haul route in terms of, you got a drink, you got a seat, you didn't have to pay for all the add-ons. That's now shifted, and they've really struggled. And I think the price is so low because there are question marks about what it looks like in the future.
Well, the price has gone down significantly in the last 3 months because they got really panicked about the fuel price, as far as I understand it. And I think if you think about the next 3 to 5 to 10 years, like the G7 economies are not growing that much. And I think people will have their belts tightened even more, which means they're going to probably stay local or trade down on their holidays. And if you're not going to go long haul, then maybe you're going to go more short haul, which is where EasyJet has always specialized. And if you can then get a great deal via a great travel company online with a package holiday, then I think that's where the opportunity for me certainly sits. Why it's been underpriced, I don't know. I think there's a lot of opportunism here, but there's still value. And, we talk about 5 billion. It's not like it's going to be done on the cheap. There's still a lot of discussion to be had in the next week, and I expect that price to go up because I think they're just trying it on a bit.
Thanks to our sponsor, Travelzoo, the club for travel enthusiasts. Join Travelzoo today for hand-picked deals exclusively for members.
This wasn't the first time a rumour has entered the market around EasyJet. A few years ago, Stelios wanted to buy more shares and wanted to take more ownership. Then he wanted to go a different way and potentially sell some of his shares. Remember, he's still got quite a say in that business. But then there was also this other rumour about MSC. One of the not just one of the largest cruise lines in the world, but we forget they're a logistics business. So they're a firm that has been doing cargo ships for that was their original business. So what about that one? Throwing that one into the mix, Will? how would MSC be as a suitor for EasyJet? And will they come to the table, do you think?
I don't know if they'll come to the table. I mean, I don't know whether that's a story to then drive the price out. Things get put in the press and, you get all the sort of propaganda at these sort of sale times. It would certainly be very interesting. And I think the difference with them is they are an operator. They're a holiday operator as well. They understand the logistics of all of these things. And what an amazing fit to have both an airline and a cruise company and that distribution to the market that both companies have already got into place. You could have huge, economies of scale, and you could create almost a sort of a super product around that side of things. So that's why I'm so skeptical about the current offer and whether that is sort of good for the industry, because it just doesn't feel like a sort of a travel operator coming in to take it forward. And maybe that's the cynicism about private equity, and I'll be proved completely wrong. It has been known.
We should add that MSC haven't formally made a bid. It was a rumor, but we do know that they have about 100 billion of net worth, which they would definitely throw behind one if they needed to. And to your point, logistics wise, being one of the largest European carriers for cruise and the amount of ports that they operate, we're not talking about a small business. I heard the other day that MSC are 4% of Italy's GDP. MSCs make up 4%. That's incredible. So we're not talking about a small business. So they could definitely come to the table. So are you both agreeing that EasyJet's incredibly undervalued at this price point?
Yes.
I think so, yeah. And I think MSC, to my point as well, I think would be just as great a purchaser as Castlelake, albeit for a very different reason. But yeah, I imagine a super brand like that would be absolutely fantastic for connectivity, for loyalty. Like once you get locked in there, I don't think you're escaping. So many great things to come.
There's a lot of risk though in terms of having that many assets together. That would be my only sort of reservation on that. Imagine, heaven forbid, a sort of another COVID event or something. That is a hell of a lot to be committed on. But yeah, I can see that playing out very nicely.
Listening to Antonio, who works at MSC, speak recently at an event, I have to say, logistically, listen to how they managed during the conflict of repositioning ships was highly impressive and goes to show how much experience they have in not just haulage and from logistics, but they are a very well-oiled machine. So I think there would be an opportunity for them with EasyJet. My challenge is I think it's probably not what they want to do right now. To your point, Will, it's another big asset to be responsible for. Okay, so how's this going to play out for the industry? Is this going to be a good thing for the industry if Castlelake get involved? Is it going to be bad, or is it going to be plain ugly? So, Andy, what's your take?
I've been the optimistic one here, so I'm going to remain optimistic. I think if it can happen and the price is right, you've got a good operation, you've got good money behind it. We already talked about risk. This is 38 billion of assets they have. This is another part of their puzzle. I think there's a lot of opportunity to grow the holiday side still, maybe fend off from Ryanair because there's rumours of them coming into holidays as well potentially. So I think if it happens, then gives more solidity, and I would hope there's more opportunity to grow the B2B and the B2C side.
Okay, Will, what's your take?
You'd be surprised to learn that I'm a pessimist. I don't see this as good because I'm quite cynical about how they'd actually approach it and where the approach is coming from. It doesn't really fit into their model. It feels a little bit like a conflict of interest. They obviously are leasing planes to other airlines. And that's their bread and butter. That's their model. I wonder whether it is just a clever ploy by the board ultimately right now to push the share price up. And ultimately, we'll be talking about this in a couple of months and nothing will have changed. And probably to Andy's point, they will push on knowing what an absolute goldmine they have in the holiday industry, what a sound airline they have as well, and how everyone should stay orange. And the only other point I'd say is, I'm not sure, and I know nothing about this, but I'm not sure that Stelios would necessarily let this happen. I mean, he's still got a pretty big controlling stake in the airline. I can't see that he would want to see it dismantled. And look, maybe it won't be, but my money says Nothing ultimately changes, and this is just a play.
Okay, well, my take is, I think it's going to be even worse. If this did happen, I think this could be quite ugly for the industry. And the reasons are probably two or threefold. First off, whenever a large private equity or fund like this was to get involved with a business, they often look to recover their investment quite quickly. And that will be definitely going after the B2B channels and those APIs to all those travel partners in the industry, even if it's a marginal increase by a couple of pounds. That's a very quick way to increase revenues into the business. And I think that they would also look to streamline their operations somehow and look to consolidate, whether if that's the introduction of better AI or just streamlining people in the business. I think that would create disruption. And I also feel that if they go into this, it could really disrupt the way that low cost is factored into so many OTAs and how they're utilized. So I can see it becoming quite ugly for the industry. But I totally agree with your point that I would like to think that Easyjet will see this and say, no way, this is far too low for our operation. You're speaking to us and communicating to us at a time where our stock is far underpriced in an economic environment with this disruption. So I think they'll step away from it and they'll let them maybe flush a little bit more leg to see if they can get it up to raise that share price. But I don't think they're going to do a deal. Did you like that analogy, Will?
I did very much. Worry where your brain goes sometimes.
Well, that's where we'll leave the Easyjet and Castlelake for today. But as I said, I don't think this one's going away. We'll keep tracking it. And to Will's point at the beginning, you never know. We could be talking about this either next week as a deal's done, or it will be talked about for many months. If you guys have any comments about the things we've covered today, please do leave a message. We'd love to get your take. We'd love to share your views on future shows. So please subscribe, rate, share the podcast, and connect with us on LinkedIn on our page, Let's Talk Travel, or on YouTube, which is Let's Talk Travel Podcast, to continue the debate. Thanks for listening.